Good morning, everyone. Thanks for joining us. As we get started here and wait for a few more folks, I can see that there's a few more folks joining. While they're doing that, I thought it might be helpful for all of us to just go through quickly what DLS does, who we are, how we do it, and then I'm going to turn it over to this morning's presenters from the Bureau of Accounts. Before I do that, I do just want to say thank you again for joining us. We're excited to give this presentation this morning. We had a presentation just a couple weeks ago where free cash was a very hot topic, and we got a lot of questions on it. This presentation is going to be very technical. We're going to be talking about how free cash is reviewed and certified from the folks who actually do it. So like I said, we're excited to be here this morning. And we look forward to taking all the questions that you have at the end of the presentation. You can also submit those during the presentation in the chat and Q&A feature at the bottom of the Zoom. And like I said, we'll be answering all of those towards the end. Tom, would you mind just going to the next slide for me? Thank you. So again, I'm just going to provide a very quick overview of what DLS is and what our mission is. Then I'll be turning over to Andrew to begin our presentation this morning. So if you were to go to our website, mass.gov/DLS, you'd see our mission statement right at the top. DLS promotes sound municipal finance management practices and supports local officials by providing guidance, training, and oversight. And so this morning we'll be focusing on those first two, guidance and training. And it's really a focus that we've had for probably close to 2.5 years now. Our new training initiative, where we're trying to provide a ton of resources to both local seasoned municipal finance officials, as well as folks that are new to the field, and everyone in between. Or maybe it's just someone who's getting ready for town meeting and wants to know what free cash is. So how we do this is through our 5 different bureaus, all of which are listed right on the slide here. The Bureau of Accounts, as I mentioned, the staff that we'll be hearing from today. The Bureau of Local Assessment, we deal with property valuation. The Data Analytics and Resource Bureau, they manage our website. They're in charge of our data bank. We have a ton of good information on our website that I would really encourage you to go on and look at, whether it be for your own community or for others or your peers. Again, you can find that right on our website. We have our Financial Management Resource Bureau, who offers free local financial management consulting services, and our Bureau of Municipal Finance Law provides different legal guidance and advisories. Again, also available on our website. Also on our website, you can see what the homepage looks like in the bottom right-hand screen of this slide. You can also visit our Municipal Finance Training and Resource Center that has a ton of different good resources on not only free cash, but other areas of municipal finance that, like I said, we've been working on for a couple of years now, and are very proud of the work that we've done, and hope that you'll be able to learn from it and make use of it. Before we do get started, I do just want to mention a couple of quick things. This presentation is being recorded. It will be available after the fact. So after this morning, probably sometime later this week or early next week, we will be distributing both the recorded version of this presentation as well as the accompanying slides that the presenters will be going to. And I do just want to remind everyone, we'll be doing questions at the end. And if you do have questions during the presentation, feel free just to put them in the chat, or excuse me, please feel free to put them in the Q&A section of the Zoom tool at the bottom of the screen, and we'll be sure to answer those at the very, very end. I think with all of that said, I'm going to turn it on to Andrew Nelson, who's going to be our first presenter this morning.
Thank you, Frank. Tom, if you want to go to the next slide, please. Good morning, everyone. My name is Andrew Nelson. I am the supervisor of the offices are broken up basically into an Eastern, Central, and Western format. The 3 of us that will be presenting today are the 3 supervisors. I am the Central Region Supervisor. Tom Guilfoyle is the Eastern Region Supervisor, and Jared Curtis is the Western Region Supervisor. We're going to walk you through the forms and requirements for submitting your free cash balance sheet. for certification to us. I'm going to handle the first part, which is the balance sheet submission. That is the combined balance sheet template with all of its subforms that are in our template. The system generated trial balance, the system generated undesignated fund balance, and then the undesignated balance roll forward. Tom Guilfoyle is going to walk you through the balance sheet checklist, and then Jared Curtis will take care of the treasurer's year-end cash, the cash reconciliation, the outstanding receivables, the statement of indebtedness, and the snow and ice form. So if we can start off here now with this first slide here, this is the, and all of the slides will be made available to everyone at the end. Frank and folks will email everyone the presentation and the slides. We tried to be consistent. We think we have everything in there so that something in one section ties out to the next section, so you can see where things carry through and where they came from. If you have questions about any of that, you can reach out to your field rep and follow up with them, or, you know, ask a question today if you have it immediately. But so this first slide is the balance sheet landing page. This is where you end up in Gateway. You start off with the balance sheet. It's also where you're going to end up. It shows all of the subforms under the form name there. Those are the forms you have to complete in order to submit this form. This form cannot be submitted until all of those other forms, the balance sheet checklist, the year-end cash, everything you see listed there is in form submit status. So if you haven't submitted it, if you've completed it but not submitted it, you cannot submit this form. And if you haven't completed it, obviously you haven't submitted it. But there are three things that also need to be uploaded to this page. And those three things are the combined balance sheet template, which is on the landing page. It is a template that we have provided for you that you then download to your computer and complete. And I'm going to walk you through how to fill that out. But that has to be uploaded here after you've completed it. You have to upload a closed system generated trial balance, general fund trial balance. That needs to be uploaded, as well as a system generated closed undesignated fund balance analysis. Those things all, like I said, have to be closed. We will not accept them if they are not closed from your system.
Andrew, can I jump in 1 second?
Absolutely.
On the combined balance sheet template, and this is something that we update every year. So we want you to use the latest version once we put it up on the website, which probably will be in June, I would say. But we do make changes from time to time, and we always want you to use the latest current version. So please remember that when you're going to put in your submission.
Excellent point, and I was going to mention that a little later, not on this screen, but thank you. That is important. You're not going to be able to use the same template every year and just delete what you had in the previous year and add it. You need to, there's a color code. I'll explain that a little later so you can tell if you have the most recent version. But there are changes, as Tom said, and we want the most recent version. We try and update it every year with little tweaks, things that have added over the years. The last thing on this screen that is important is you'll see the circle around the date, the 10/18/21 date, and that is your upcoming town meeting. We ask that you please fill out this section with any upcoming town meetings you have. We refer to this to see who has an upcoming meeting. We want to make sure we get your balance sheet done in time for your upcoming town meeting. If your next town meeting, if you're submitting this in the fall and your next town meeting isn't until your annual town meeting in April or May, you really don't need to fill this out. But if you have a fall town meeting coming up in the fall, or we're getting balance sheets in still, I certified one this morning, and you have a fall annual town meeting coming up in the spring, please use it in that case, where you'd want to let us know that you have, you know, a meeting May 4th or May 10th or something, so that we know what we're up against here and how to prioritize some of these things. We will try and work the ones that have a closer town meeting ahead of some of the ones that do not. So the next screen. This is the top half of the combined balance sheet. The combined balance sheet, it's broken up into, we've broken it up here into an asset, liability, and fund balance section. So there's third, and the third here in these sheets. This should tie out to all of the other support forms. So when you get the email from Frank after the fact, you can use this kind of as a reference and see where numbers come from and where they follow through to. It will tie to the trial balance here and the backup forms. Things we want you to know about the combined balance sheet. First and foremost, obviously, it must balance. We do get balance sheets every year that come out of balance. So your assets must equal your liabilities plus fund balance in all of the funds, please. You can edit this form to fit your town. Most cases, that means removing things. If you want to delete or hide columns or rows, things to shorten it up, make it easier for you if you don't have them, that is fine. If you need to add something, you can also add in a row. You wouldn't have to add in a column. I don't think we have any other fund types that we don't have listed here, so you wouldn't add in a column, but if you had to add in a row for a specific thing, that's certainly allowable. We have put in almost everything that we see regularly, but I'm sure there are a few things in certain towns that are unique to those towns that if you needed to add them, we have no problem with that. For the general fund column, two things that we especially want to hammer home. Please do not include your fixed assets in the general fund column. If you want to list them on there, use the account group, the long-term debt group, the last column, which is the, well, second to last column. The last column is a total column, but is the last column of the sub columns over to the right. You can put your fixed assets in that column if you wish to list them. We do not require you to list your fixed assets, and we please do not want them in the general fund. You'll notice that the box for the fixed assets in the general fund is greened out. It's shaded out, so you can't use it here. Those colors are, Tom mentioned, we put out a new version of the combined every year. Those colors change annually. That's how we know which version we have. So the 2021 version is this green version. I did the 22 version. We haven't sent it out officially yet. I believe it's yellow, if I remember right. So you can see if you have the most recent version by what color you have. If you had the colors last year, you don't have the most recent version. The other thing we do not want to see in the general fund, besides fixed assets, is debt. We do not want to see any debt in the general fund column. There are exceptions to everything. If you have deficit bonds, your community that has deficit bonds, that would be allowable in the general fund. But in most cases, we do not want to see your bands or anything like that for capital in the general fund column. The combined balance sheet should match the supporting fund document. You'll see there's a tab for each special revenue, for capital, enterprise, all of that. The combined should equal what's on those. We shouldn't see any variance between what is in the combined and what is in the support tabs. And if you want to switch to the next slide, Tom, you'll see here two things I want to highlight. There is an agency fund line. It's circled there. It is, you usually would use it in the trust fund column. You don't have to include your agency fund balance within the trust fund balance down the bottom. Most agency funds are liabilities. They would be listed on this line. There are some agency funds that do have a fund balance, and we do allow you to break those out so you could show what's listed as a fund balance and what's listed as a liability. If you do not use this line, we are okay with it, but we would prefer you use it. We have included it there. You can use the agency fund line, break it out as a liability. If you do choose to include it as a fund balance and double it up with the trust fund in there, then it'll be all right. One thing I will note is You'll end up with a little variance when you do your Schedule A and you do the KAR1, if you've included the agency fund in the fund balance, the agency fund liability in the fund balance, then it's going to throw off your KAR1. You'll have to give an explanation on what the variance is. If you use the agency fund liability line, you would not have that variance. I also want to draw your attention to right below the agency fund line, we have notes payable and bonds payable. Notes payable are short-term debt. That is your band. That is the line you're going to use for your bands. Bonds payable is your long-term debt. That is the line you should use for your long-term debt. Try not to confuse those too much. Your notes payable are generally going to be in the capital fund, special revenue, and enterprise, usually. Whereas your bonds payable are generally only in the enterprise and the long-term debt column. You want to go to the next slide. You'll see on this, we have some checks for you down the bottom. It shows if your sub-funds, if your special revenue tab is not in agreement with your combined balance sheet, it will show you a variance in those bottom sections there. There's proof there for all of those. That'll tell you if the balance sheet is not in balance, the first one, and then the next one tells you if you're not in balance to the tab that represents the special revenue, the capital, the enterprise, things like that. Now we're going to move on to the next form, which is the multiple general funds. We did not put any data in here. There are a small percentage of communities that use this. If you used multiple general funds, so you have a fund 2, a fund 3, or whatever you happen to name them. So if you have a fund, you keep all your encumbrances in a special fund, or you keep all of your withholdings in another fund, or all of your school encumbrances or something. Those are all types of things we see. Then you keep them in separate general funds. They're not all listed. You can't do a report of just one general fund when you do your trial balance. Then you need to fill this form out. And you would list them out, and this should tie to the total on this form, should tie to the total to the general fund column in the combined balance sheet. I have one town that has, I think, 8 general funds in it, so we do see quite a bit of them. When we do see these, it's usually just 2 or 3. It does complicate things a little, especially if you're new or don't have a lot of experience with this. It can be an easy thing to get a little confused on. That's why we've added this tab to try and make it a little clearer so you can see the funds and how they carry out and how they should add together. Next slide, please, Tom. This is the next tab. All of these tabs, by the way, in the template have an instructions tab right before them. So it goes, there's a combined balance sheet instructions and the combined balance sheet. Then an instructions for the multi-fund general fund, and then the actual tab where you fill it out. So each one, there's an instruction right before you get to the actual spreadsheet that you would fill out if you need to refer to those, or you can just reach out to your field rep and ask any questions or advice you have there. This is the general fund accounts receivable detail. This is a common mistake or misstep that some people make. The only things we need in this are the general categories that sort of roll together. The main things we're looking for here is if you have an other receivable line, a due from other government, a departmental, especially if you've rolled multiple receivables together on the same line. So for example, departmental, ambulance, veterans may roll there, or they may be both. Veterans may be due from other government. You would want to break those out for us, especially if you have 2 different things in there. We want to be able to see and track back what they are to the trial balance. what makes up certain numbers on there. What you do not need to list here are your property tax. You don't have to put any of your real estate, any of your personal property, your motor vehicle, all of those type of things you don't need to list. And you especially don't need to list them by year. We sometimes get from towns, this form will be 2, 3, 4 pages long because they've broken out all of their real estate receivables, all of their personal property, all of their motor vehicle, and they've done it by individual years. And we don't need that kind of information on here. We're just looking for things to basically make up the very general nebulous lines of the general fund receivables here, the other, the due froms, and the department. You don't need to include the boat excise or anything here. There's a separate line for that we see. On this form, if it's deferred, you need to put in the deferred revenue. If you have a deferred revenue in the liability section, if you subsequently received receipts through September 30th, please include that here. If you just fill out the receivable column and we don't see the other part, then a receivable without a deferred or a receipt would end up being a hit to free cash. Any non-cash asset that doesn't have some sort of other offset to it is usually a hit to free cash. So we're looking for, if you have any non-cash asset, we're looking for something to offset it, whether it be a deferred revenue or a receipt subsequent or a ban or something like that. This carries through to all the funds. We're looking for something to offset a receivable. It could be a reservation of fund balance. If you have inventory as an asset and you have a reserve for inventory down in the fund balance section, that would take care of that. But if you don't have something, those are hits to free cash. Moving along. So the one thing you will see in the presentation, if you try and do it, we only used one page for special revenue. We didn't want to give you the special revenue for the town. We borrowed this from was 10 or 11 pages long. We didn't want to throw in 10 or 11 pages of special revenue for you to look at. So what's on the page will not total up to the total at the bottom, but the total at the bottom will tie out to the total on the combined balance sheet form. That is the same for special revenue, capital, trust, agency, all of those. We just used the one page. So first thing is here, that total must equal that 13,255,689. My eyes aren't great with the little screen here. All of those things, all of those totals must equal what's on the combined. Same thing for your receivables here and same things for your deferred. We're going to check that out to make sure it ties up to the combined balance sheet. Please use one line for each fund. Do not, we have places that will put, say a special ed grant, and they'll put the receivable for it on one line, and then they'll put a new line for the deferred revenue, and then a third line for the fund balance, and then a fourth line for any receipts. First of all, the formula can't, the deferred can't offset the accounts receivable if they're on different lines, and same with the receipts and the fund balance. So you're going to have all these deficits showing to the right. But you need to please use one line for each fund, and we want you to do everything at the fund level. Do not roll anything together here. Do not do all of your school grants as one line. We have to see all of the school grants individual on their own line. On the capital projects, all of the capital projects need each individual project needs its own line. You can't roll up all of the sewer projects on one line or all of the DPW projects on one line. Each individual project should have its own line so we can see it at the lowest level of detail there, but only one line as I said for each one. And for the fund name, if you could try and keep it something, functional, general, that we may be able to figure out what it is, as you see in many of the names here. What we don't want is, Fund 22 here, or whatever you may call them locally, or some code you use locally where we have no idea what that means. we're going to be looking at some of these for certain things. But we have to find your circuit breaker fund within here. We have to locate that and make sure it's within the limits. You can only carry 1 year of circuit breaker. You can only carry as much as you received in the previous year for your fund balance there. So we have to check that line out. So we need to know where circuit breaker is. It can't be called something that you nicknamed it or locally coded it that we couldn't figure out what that is. So please try and use a functional title that we would understand. We can go to capital. Capital projects, list them individually, as I said. If you have bans for a capital project, especially something that's in deficit, the ban needs to be listed on the same line as the capital project. If you have a ban for a capital project, we will not hit your capital project deficit. If you haven't banned for it, it is a hit to free cash. If you have receipts, you could get receipts through school building or some other form that would also cover up any deficits there. As with the special revenue and all of these forms, the totals at the bottom need to tie to the combined balance sheet. Next slide, please. Enterprise funds. Each enterprise fund needs to have its own column. So if you have, I think Tom has a community with 8 or 9 enterprise funds. You need to list each one of them individually. I think the most I have in Central Mass is I think I have one with 7 enterprise funds, so we have 7 here. You can delete the extra columns if you want to have the form look a little neater like this one. We have 10 columns for up to 10 enterprise funds on the form. If you want, you can leave just fill out the one and leave all 10 on there. It makes everything a little smaller and more difficult to see for you and for us if you do it that way, but that's up to you how you want to do it. With the enterprise funds, these are true enterprise funds. These are Chapter 44, Chapter 53, Section 44 F.5. I have the chapter and the section. Chapter 53, Section 44 F.5 enterprise funds. These aren't just something, if you have a water fund that's special revenue and your auditors listed in your audit report as enterprise funds, you don't have to place it in an enterprise fund. If you want to, that's fine. But we're not going to certify retained earnings for something that's not a true enterprise fund. To be a true enterprise fund, the previous year you should have filled out an A2 for it in the tax recap. These also will be done. You'll get retained earnings certified through these. Did we put in more than one page for them, Tom? I think it's just one page for these either. We just showed the asset section. So, oh no, we did the whole thing. So yeah, they carry through. Excuse me. So you'll see this should balance. Again, assets should equal liabilities plus fund balance. The calculation form that you'll receive is a little different than the free cash form. Every number on the enterprise fund will show up on the form. We will show it once it goes, they each offset cash and undesignated, and you will see the calculation done that way. You will all receive that with each enterprise fund. Next, please. Trust funds. These are usually, there's less hits generally here. I mean, we do find hits in the trust fund section, but it is usually less than you will find in special revenue or capital. Obviously, you have some big numbers in trust fund. That's where you're going to find your OPEB, your stabilization funds, things like that. Please list your stabilization funds as trust and not special revenue. Excuse me. Same situation as the other forms. You're going to have your totals tied to the combined balance sheet. Any receipts you might have received for anything here would be listed to offset anything. You do not, on any of these forms, need to list receipts for things that didn't have a deficit. I will sometimes see balance sheets and people will have a positive fund balance and they will list the receipts anyway, because they did receive receipts that supplement those funds. You do not have to list any receipts for anything that it doesn't change your free cash or affect anything unless you had a deficit fund balance, and the receipts are covering up that. Agency, please. Agency, these are mostly liabilities. They're pass-through things in most cases. They're money that does not really belong to the town. Police detail, fire detail, this is money that's going to be paid out to policemen that performed a detail. It's collected from a third-party vendor. You may have some surety deposits, things like that here that the town is just holding. As I said earlier, agency funds in most cases are liabilities. If that's the case, you could list them on that liability line on the combined balance sheet. You do see down the bottom there that you can break out if something here does have a fund balance. You can break it out that way so that you can show that part of it is in the fund balance section of the combined and part of it is in the liability section of the combined. As I said earlier, you do not have to do that, but it is easier and cleaner for us and easier for you to track if you're looking at things year over year. Moving to the next form, please. This is the internal service. I'd say maybe 10% of the communities have internal service funds. Common internal service funds, the most common one is if you're self-insured. You do not have a premium insurance policy. You self-insure yourself locally. Workman's comp, unemployment insurance, these are other common internal service funds. If you have a self-insurance fund, I think there are 17 of them in the state, 18 of them around there in the state currently, from cities and towns. If you have a self-insurance fund for health insurance, you must include your IBNR number here. That is the second number on the liabilities. That is incurred but not reported. This is the claims that you get that number from your healthcare provider. These are claims that were filed in May and June usually that were not, they're liabilities of the current year, but they were not reported until later in, after the close of the year. But you need to get that number and include it there. You need to have enough in your fund balance to cover those liabilities, or else there would be a negative fund balance. We have to get that number to compare it to your fund balance when we're calculating your free cash. Next, please. The undesignated fund roll forward, undesignated fund balance roll forward. Many of you have probably gotten a call for us when we've had trouble proving this in the past. I'm hoping that walking through this a little will help you understand better what we're looking for. This form is basically broken up into thirds. The top third is everything that was on last year. This is the fund balance section of the general fund only. And the top third is everything that was on last year's balance sheet. So those numbers are going to come exactly as they were presented on the June 30 balance sheet to DOR the year before. You're going to list on whatever was there. The middle section is everything that is on this year's balance sheet is going to be listed there exactly as it's listed on this year's balance sheet. And then the bottom third is where you're going to do your reconciliation. This is where your closing entries go. And if you had any adjustments, if you turned in a balance sheet last year and then your auditors, you had your auditors come in later, or you found something later and an adjustment was made to your fund balance or something, do not include that change in the top. That's going to be something you're going to list down here in this reconciliation section. But the reconciliation section is going to have your closing entries, basically, your revenue, your expenditure, any other financing sources, any other financing uses you've had, and any adjustments you might have had. An audit adjustment that came directly from your auditors. If you fill that line out, my staff, in my case, will ask, is that an audit adjustment that came from your auditor, or is it something you found? Basically, they'll ask for a little more detail. What happened there? Why are we doing this? what went on. We often need that information to help with the proof, which we have to prove your free cash within a certain amount. And if you change fund balance, then that can be something that needs to be added or subtracted to your proofs. Without that information, we may not be able to prove your free cash. This form can often be something you fill it out here. We're then going to take it and do it ourselves. We compare the two. We'll often call you with a question on it. Hopefully, we can resolve anything. We're going to compare this to your your system generated undesignated analysis, which I believe is the next form. Yeah, so this is the undesignated analysis that you're going to provide from your system. This is one of those 3 things that I said you needed to upload at the very beginning on the balance sheet landing page. In a perfect world, this is going to look very similar to this. It's going to have 6, 7, 8 entries on it. We get these from some places and there'll be 3, 4, 5 pages. You shouldn't be making individual entries regularly to your fund balance section, right to undesignated. You should be rolling your totals at the end of the year. There should be an entry, and I understand that something gets missed now and again and you have to, make an adjustment. That's perfectly normal, but that wouldn't be 3 or 4 pages worth of entries here. So this is going to start usually with your previous year's fund balance. You're going to undo all of your reservations the previous year. So you make your closing entries, and I'm using June 30th and July 1st as dates. I know no one does their closing entries on June 30th, and no one does their reversing entries on July 1st. But on June 30th, you should be doing your closing entries. You set up all your reservations. You set up your reserve for encumbrance, your reserve for expenditure, your reserve for continuing appropriation, whatever your town might have. You set those up. Theoretically, the next day, those are only just bookkeeping entries. You're reversing them. So you should be undoing them the next day. These are the entries here. You see the credit entries are the reversal of last year's entries. The debit entries are the setting up of this year's entries. You'll see that when you look at the form we just completed, the roll forward analysis. Those numbers will tie to that. If you have any audit adjustments, something like that, like we just talked about, they would appear on this form, hopefully, and as the entry was made to undesignated. We should be able to see what you're doing here. We should be able to, this form should tie very closely to the last form. We should be able to find the things you're telling us in this form and on the other form, so that we can roll and we will come to your undesignated fund balance at the end of this year, the current year. You'll see that down the bottom. The 17 million is what we have back on the combined balance sheet. It's what that previous form rolled to. I'm going to walk through a couple of the common, your reserve for encumbrance is any services or goods you received but you haven't paid for during the end of the year. You hadn't paid the bill yet. That's going to be an encumbrance. You encumber that money. You owe it. You're going to take it out of your fund balance because you know it. You know you owe this money. You have to, that money's spoken for. So you're going to put that aside. Your reserve for expenditure is anything that is set up for the next year's budget. So if you vote to free cash for the next year's budget, or you had overlay surplus that you voted for the current year's budget, these numbers are going to be shown in reserve for expenditure. Reserve for continuing appropriation is projects that are not funded by debt, not capital projects, but they're projects that were funded either in a budget line item or through free cash or something like that, that were not completed during the year. So if you appropriate $500,000 to do some project in town and the project is ongoing and there's a $300,000 balance left in that project, that money's not available. You don't want it in undesignated. You have to set it aside as a continuing appropriation. It's money that you can't spend it again. It's already spoken for to that project. So you have to set it aside as a reservation for continuing appropriation. If you have special money that cannot be spent, premiums is a common one. This is the old premiums from pre-muni mod. They're still housed in the general fund. So if you have a pre-muni mod premium, that money is not available to be spent for purposes other than the reduction of the debt it is related to. You have to reserve that money. So you have to set that aside. If you have some sort of debt service money that's restricted, a common one is on your DE1, you may have raised too much money the previous year. You thought you needed $1 million, you turned out to only need $900,000 for a debt excluded project. You have to reserve that $100,000 variance and use it for the same project on the next year's DE1. But that money's not available to be just used as anything. It's not an available fund. So you need to set that aside. That would be a reserve debt service. Another common reservation you see here, but it's the opposite of all the ones I said here, is a reserve for a snow and ice deficit. If you have a snow and ice deficit, that's going to be a deficit. So it's going to be a debit entry on the combined balance sheet, but it's going to be, when you set the thing up, it's going to be a credit entry to undesignated. You're going to add the money back to undesignated there when you make your entry. So it's going to be the opposite accounting entry as all of these other reservations, and it will show as a negative on your, or a debit on your balance sheet. Those are the most common ones. There are lots of other reservations. You can't just set money aside because you want to do something with it. If it has not been appropriated by the appropriating body of the community, city council or town meeting or whatever your appropriating body is, you can't just put money aside unless it's one of these things I just mentioned that has already been voted for something or is a restricted fund. You can't just decide, oh, we're going to put aside X amount of dollars every year for something we know that's going to happen down the road without an appropriation. So you can't, we will ask about certain reservations of fund balance that fall out of the common categories. We will ask you, and we may make you close it out to your undesignated fund balance, and then you can appropriate it for any legal purpose at that point. Next, this is the last of the reports that you had to submit. This is the system generated trial balance, the general fund trial balance. That was a mouthful. This should tie exactly to your combined balance sheet. What we see on here is what we want to see on the combined balance sheet. If your system allows for you to total up categories, we would very much appreciate that. I know certain systems do and certain systems don't. So if your system allows you to total up all of your years of real estate receivables so that there's a total, that would be much appreciated. If not, we have to total them up and make sure they equal what you have on the combined. But what you have on here should reflect what's on. We're going to tie this out exactly to your combined balance sheet. Things we're looking for here. It should be closed, as I mentioned earlier. You need to have, if you have, I'm trying to figure out how to say this. If you use due tos and due froms, first of all, due tos and due tos and due froms should equal a net to zero so that you're not carrying something there. But if you use due to and due froms, all your cash is in the general fund, then that's what you should, it should be shown on here as well as on the combined balance sheet. Don't put the cash, take the cash out of the, if you have all the cash in the general fund, show it that way with the due to and due froms. Don't then allocate the cash as you would just pretending it's in those other funds. Please, we want this to tie out exactly. All of the reservations on here, the fund balance things should be set up. Like I said, there shouldn't be revenues and expenditures on here. Those should be closed already. And if you have any questions on this or anything else, please consult your rep. And I think I am complete. We're going to move to the checklist and Tom Guilfoyle.
Morning. Thanks, Andrew. So my section I'm going to cover is on the balance sheet checklist. So I like to call this trust but verify. So we, again, are asking you at the top of this form to provide us with your town meeting or city council date in order to certify free cash. We get very busy in the fall. Many submissions come in at the same time. Some of them have meetings, some of them don't. Some people identify a meeting date, some don't. So we are, we're always trying to verify this. I believe there'll be an update to the gateway system where that will now be a mandatory field. So you're going to have to put in a date or check, I do not have a town meeting. So that will help us definitely prioritize the work and get things done in time for you. Again, on the trust and verify, question 1, have you completed all the required forms we've asked? So we do.
Tom, can I jump in for 1 second?
Go right ahead.
Despite filling out, you have to fill that out and everything. Please also fill in the one I showed you previously on the balance sheet landing page. If we're in the busy season and we have 13 balance sheets in, we may not have opened your checklist yet, but we will see the balance sheet landing page that has it there. So that both dates are important. Please fill it, or it's the same date. Both places are important, please. Thank you.
And the mandatory field, I believe, will be on the balance sheet submission that Andrew just talked about. So that's where it's gonna key off of that. Also on that note, when you do submit, please email or call your field rep. We do not get notifications all the time immediately. Like if you submit just the balance sheet checklist form, we don't get notified of that. But if you have your balance sheet submission with that mandatory date, as we just talked about, that will key a gateway alert for your field rep, but they may have gotten 15 of them in the same day. So it's very important that you notify them by email or a phone call and just say, hey, I've submitted. We've had some people in the past that thought they submitted their balance sheet and 2 weeks later called up, said, how's it going? And we looked at it and said, yeah, it's not submitted in the system. We don't see it. So very important to know that. Second question on the checklist, have all cash accounts, do they balance? Do they reconcile with the treasurer? It's a yes or no. If they do not, we're looking for the amount of the variance here, and that variance should tie to the cash reconciliation page, which Jared Curtis will be discussing in a little bit. Again, question 3, do all receivables with the treasurer and collector, do all receivables tie? We will look to that receivables reconciliation form and check that and make sure there are no variances there. And we're looking to see that, the treasurer and the accountant are reconciling monthly or as often as they can to keep the books in good shape and keep everything online. Question 4, are there any unrecorded property tax refunds due taxpayers? So if you know of an unrecorded a refund due a taxpayer, you need to identify it here because that is a liability to the community and we will need to reduce that from your free cash. So we want that number reported here. Question 5, have you accrued any property taxes? So if you do a 60-day accrual, I would say maybe 30% of the communities roughly do a 60-day accrual. We have a form that we look at where we compare your real estate and personal property receivables, and we compare that to your overlay and your deferred revenue accounts for real and personal. If those amounts do not match, the first thing we go and look for, has there been a 60-day accrual for property taxes? And that will usually balance out the equation. If not, then you will definitely get a call from your field rep asking why that equation isn't in balance and what's missing or what happened. Andrew just talked about it, the due tos and the due froms. So do they balance on the balance sheet? Do they net out to zero? On the balance sheet itself, you can either have them all on the same line or you can report, due tos and due froms on separate lines. But the important thing there is that they tie out to zero. If they don't, we're going to be asking for a new balance sheet and having you look into what's going on there. Payables and encumbrances, have they all been recorded? So if they have not been recorded, we want that information identified here. And then we would maybe potentially have an adjustment to the free cash calculation. Now we're going to get into the main part of the checklist for us is to use it to prove your free cash. So we, do the calculation based off off your trial balance and your combined balance sheet. We come up with that calculation, and then we have to say, okay, is it reasonable? So question 8 starts off, have you recorded all of your free cash and retained earnings votes? So we want to make sure those are all recorded prior to June 30th. If they are not, we would want the date and the amount listed here. And because if they are not recorded, then that would be a reduction to undesignated fund balance, because we can't allow you to spend that money twice. We'd like it only, we'd like it reported and recorded ahead of time, but if it's not, it's very important that we have it shown here so that we can deduct from the calculation and do not over certify free cash. Question 9, local estimated receipts. The estimated local receipts number comes from your prior year recap. All right, page 3, we get that number right from there. The actual number, actual local receipt number, will come from your current year recap sheet. And we compare the two and we look at the variance. A positive variance shows us that you estimated conservatively, you had good receipts. So there's, in this example, we'd have $1.2 million of money flowing to free cash. All right, you had a good budget year, you estimated, and receipts were strong. Question 10, any actual revenues received that are not included in number 9. So any actual amounts you received in the general fund that were not listed as local estimated receipts. Example on this one is rollback taxes. What we don't want here is tax title money. Tax title money, we would take interest and penalties on tax title, but not the tax title itself, because we have another section on our proof where we take the change in receivables from year to year. And there is another presentation, I believe it's linked in the chat, that does show the free cash process and the calculation, where we're really just discussing filling out the forms. So you may want to take a look at that presentation. I'm pretty sure it's linked in there. Question 11 on the checklist is another one where we look at the estimated cherry sheet receipts. So that first line on there, the estimated cherry sheet receipts, that comes from your prior year recap on page 2. All right, we get that number right from there, part 3, 3A, line 1. And then from that, you also have to include your offsets. You have to net your offsets from that, from the prior year. So that would be part 2B, line 5. So you would take those two numbers combined, and that will give you the estimated cherry sheet number that we're going to look at from your prior year recap. Then we look at what you actually received. So you're going to have to tell us what you actually received from the state for cherry sheet receipts, report that number. And we look and see what that variance is. If that variance is positive, it's going to help improve our free cash. If it's negative, it's going to go to reduce that. Next page, we're now, questions 12 and 13 are looking at other financing sources and uses. So the important part here when looking at this is any amounts listed here that are voted are considered budgeted. So I think that's one of the most confusing things we have a lot of questions on that we go back to towns on, because a lot will be listed with no budgeted amounts. So if you have voted it at town meeting, whether it was the annual town meeting, a special town meeting, or a council meeting, that is considered budgeted. So the only impacts to free cash would be on any unbudgeted items in this section. Question 14, the total of unencumbered, unexpended appropriation balances. So this is where we look for positive turnback amounts in your budget. So you look at your budget to actual report and all of the positive amounts that get closed out to free cash. We don't want to see any negative amounts netted here. One of the common things we see netted and have to go back on is people will include their their snow and ice deficit. So we don't want that. This is only positive amounts closed out to fund balance in your budget report. All right, so that's a very important number. So in this case, it's pretty strong, 1.6 million. Again, proving, money going to free cash. Question number 15. This is where we're analyzing how you appropriated your free cash from the prior year. So in column A, we'll see the top line is the amount certified for free cash at 13 million. Then they went to town meeting and they voted 58,000, 1.1 million, and 1.2 million for fiscal 21, okay? For the current year budget that they were in. So those monies were spent in the current year. Then they went back to town meeting and they appropriated $500,000 for the next year's budget for fiscal 22. So it's very important that you segregate those amounts in section A, so we know how much of the free cash was spent in the current year, and then how much is going to be spent in the next year, okay? Then we just do a calculation and we look what the balance is. So remaining balance is 10.2 million. That money will close back out to fund balance. Well, that closes to undesignated fund balance and is part of your free cash proof for the next year. On the right-hand column, we're only looking for your fund balance reserved for expenditure detail, okay? So any free cash amounts that were voted from the previous year's certification for the next year's budget. So fiscal 21 certification for the fiscal 22 budget. That should be set up as a free cash reserve for expenditure. And that'll have a separate line and you'll be able to see that back on the combined balance sheet and the trial balance. You'll see it set up there. The other common reserve for expenditure we see is overlay surplus that gets appropriated for the next year's budget. And we, again, will tie that amount back out to the balance sheet. Question number 6. And
Tom, before you go, can I jump in there?
Yep, go right ahead.
A common thing we see here on the right-hand side of this is sometimes people will list all of their reservations here. We don't, this is only for reserve for expenditure. Don't put your reserve for encumbrances, your reserve for continuing appropriation, or whatever else you might have in this section also. This is just things that are for the next year's budget. Thank you.
Thanks, Andrew. Next item on here is question number 16. Any unappropriated overlay surplus close to undesignated fund balance? So the assessors can release, say they release $300,000. All right. And if that money is not appropriated, then you would put $300,000 on this line and it would close to fund balance, increasing your undesignated, increasing your free cash. If the assessors release overlay surplus and the money is then appropriated, it does not go on this line. So anytime, a lot of times we'll see any kind of overlay vote getting reported on this line. If the amount has been appropriated for a purpose, then it's not closing to fund balance and will not be going to help out undesignated fund balance and increasing your free cash. Question 17, if you have Chapter 90 money, that you have a deficit for Chapter 90, any projects, we want the detail. We do allow for you to submit for reimbursement up to September 30th. And if you have submitted all the proper paperwork through September 30th for any of those Chapter 90 deficits, we will not reduce your free cash. That's one example of that's pretty much the only example where you don't have to have received the money by September 30th to get credit for it. So, but it's important that you upload that paperwork. So we're asking there. Questions 18, 19, and 20 all have to do with self-insurance and if you're a member of a regional self-insurance group. So if you are self-insured, we do want to see the IBNR number reported here, which is important. And we will tie that back to either the internal service fund or the trust fund, wherever that is. But we want to make sure that that number gets recorded. Again, trust and verify. So we ask for it in one place and we're looking for it in another. Question 21, we always ask who your CPA firm is, in case we need to get in touch with them, but generally we will talk to you before we would reach out to them directly. And we want to make sure that we keep our database correct on the audit side as well. Lastly, in this section is, this is basically the enterprise fund reconciliation, similar to what we just did for free cash in question number 15. How much retained earnings was certified, and then how was it spent? And again, we're looking to see if there's any of that previous year retained earnings that's been appropriated for the next fiscal year. We want to make sure that you have that reserved on the balance sheet. So we go look for the reserve for expenditure. And again, on the right-hand column, all we're looking for there is the amount of retained earnings that is reserved on the balance sheet as a reserve for expenditure. We're not looking for all of your reservations there, just that amount that's reserved. So we want to make sure the amount's been recorded, and we would not include it in over certifying your retained earnings calculation. And if you look at the total of those three, they had 3 enterprise funds back on the enterprise fund page. The total retained earnings, they're circled in red, is 2.2 million. If you go back and look at the combined balance sheet, you'll see that as the reserve for expenditure in the on the enterprise fund combined balance sheet. So these are the amounts and the items we look at on the checklist in order to use to prove your free cash. And again, just double check that all the information is included and we're seeing it reported correctly in both spots. So I'm going to turn over now to Jared.
Thank you, Tom. My name is Jared Curtis, and I will talk about the supporting forms and documents that accompany the balance sheet for free cash certification. Prior to submitting the Treasurer's year-end cash report, check that the figures in Part 1 tie to the detail in the Treasurer's year-end Excel template. In Part 2, the accountant or auditor must check one of the radio buttons to certify that the amounts on the report either agree with the general ledger or are not yet in agreement, but efforts are being made to reconcile the differences. One of these buttons must be selected in order to submit the form. The treasurer must upload the Excel template to the Gateway form, as this document is required for free cash certification. And this template can be found on the balance sheet landing page when you log into Gateway and you click on the balance sheet tab. Finally, both the treasurer and accountant must sign the form in the appropriate boxes at the bottom. Forms with improper signatures will be unlocked and returned to ensure they are completed and signed by the correct local officials. Next. On the cash reconciliation report, the accountant or auditor's cash and investment figures must tie to the combined balance sheet for each fund, including general, special revenue, capital, enterprise, trust, and agency. So based on that combined balance sheet that Andy had showed you at the beginning of the presentation, we're going to be taking the figures from this top section of the cash reconciliation, making sure that they tie back to the combined balance sheet of all funds and that it ties out to the total cash as well. One reoccurring issue that we continue to see each year are vague reconciling item descriptions. If you have reconciling items, be specific in the description of what the item to be reconciled is. The use of vague words will lead to additional questions from your BOA field advisor and slow the free cash review process down. Under the reconciling items, only list explainable variances in this section. If a variance cannot be explained, let the amount automatically flow to the variance cell at the bottom of the form. Unreconciled variances are a reduction to free cash. Make sure that both the treasurer and accountant sign the form in the proper fields prior to submittal. Next slide. Amounts specified on the outstanding receivables report in the general ledger column must tie to the combined balance sheet, as well as the detailed balance sheet information for special revenue, capital, enterprise, trust, and agency funds. So again, here we're looking at these supporting forms and we're tying them back to the combined balance sheet Excel template that you folks have submitted, as well as the system-generated general fund detail that you folks submitted. We want to make sure all of this information ties out. Personal property, real estate, deferred property taxes, tax liens, and tax foreclosure variances between the treasurer collector and accountant's general ledger are a hit to free cash. When reducing free cash for receivable variances, DLS looks at the absolute value within each receivable class to determine the total reduction. If a receivable variance exists due to timing between the treasurer collector and accountant, upload supporting documentation outlining the issue so your Bureau of Accounts field advisor can justify the variance and avoid reducing your community's free cash. I would also like to point out that the deferred property taxes row is a specific type of receivable. It is a receivable where the Board of Assessors have granted a deferral of all or part of a person's property tax in any given fiscal year. Do not report your community's deferred revenue amount on the outstanding receivables report. Next slide. On the outstanding receivables report, DLS recommends that the tax lien, tax title, and tax foreclosure tax possession rows are used to report general fund receivables only. Please do not report enterprise fund water and sewer liens or community preservation liens in this section. Report receivables for enterprise, special revenue, capital, trust, and agency under the user charges receivables section of the outstanding receivables report. The outstanding receivables report requires 3 signatures: accountant, auditor, collector, treasurer, and treasurer. Make sure that each local official signs in the appropriate signature box. If your community has a combined treasurer collector, make sure they sign in both the collector, treasurer, and treasurer spots. If your community has a separate collector and treasurer, they both need to sign the form. The collector should sign on the collector treasurer box and the treasurer on the treasurer box. DLS will not accept an accountant or auditor signing in the collector, treasurer, or treasurer spots on the form. Next slide. Prior to submitting the statement of indebtedness, check that the figures tie to the detail in the statement of indebtedness' Excel template. Again, this Excel template is listed, is on the balance sheet landing page. You can grab that right there as well. Confirm that the figures on the statement of indebtedness tie to the combined balance sheet all funds for both short and long-term debt. So we want you to look at this information here and tie it back to your combined balance sheet all funds that Andy went over at the beginning of the presentation. If there's any variances, this will generate questions from your Bureau of Accounts field advisor. The treasurer must upload the Excel template to the Gateway form, as this document is required for free cash certification. In addition to completing the Excel template, DLS will continue to accept uploads of debt detail. Finally, both the treasurer and accountant must sign the form in the appropriate boxes at the bottom. Next slide. In order to legally deficit spend in the snow and ice account, the original snow and ice budget must be greater than or equal to the prior fiscal year budget. A legal snow and ice deficit has no impact on free cash, whereas an illegal snow and ice deficit is a reduction to free cash. A snow and ice deficit must be reported in the fund equity section of the combined balance sheet unless provided for prior to closing the books. A snow and ice deficit that has not been provided for prior to the setting of a community's tax rate must be raised on page 2 of the tax rate recap. When completing the snow and ice data sheet, please do not insert negative figures into the form. The form is set up to calculate property when positive figures are reported. Next slide. Some of this information we had already discussed, but a few things that we can't hammer home enough is prior to submitting your balance sheet and supporting documentation, please make sure that all the forms are accurate and tie out to one another. Just as Andy mentioned, on the combined balance sheet, all funds, we have set up checks at the bottom of the Excel spreadsheet to make sure that they are in balance. If they're not in balance, make sure that you check to see where the issue is and balance it up and then submit it. It is important that each form is signed by the proper local official so that the review process is not delayed. Make sure to double check that you have hit submit on each Gateway form, especially the balance sheet submission page. Finally, email or call your Bureau of Accounts field advisor to inform them that you have submitted all of your balance sheet forms for free cash certification. Next slide. At this time, I'd like to turn it over to Frank and Jennifer for any questions that you folks might have. Thank you.
Before you come on, Frank, I got one. I want to go back to something I failed to address. Tom, you're going back to the yeah. Thank you. It was reminded to me by the director that I failed to mention this, and it is a very important point. When you're doing your closing entries and you're doing your system undesignated here, please do not net things. Do not net your, if you had $1 million of encumbrances last year, and this year you have $800,000 of encumbrances, do not make the entry for $200,000 the opposite way so that it brings that in line with the 800,000. Undo the $1 million and set up the $800,000. So everything goes, if there's a mistake or something doesn't work, it's very difficult for us to find it and to trace everything back if you've netted things out. Please do your, and even worse, don't net encumbrances and expenditures together. You know, you take the sum of those two. Please do your closing entries and your reversing entries every year so that they are done in full, so that we can track the data here. That's what we're looking for. If everything works well and you netted things, there's never a problem. But if something is not right, it's very difficult to untangle it if you've netted things in there. So that's an important point that we need to ask you to comply with. Thank you. Frank?
Thanks, Andrew, and thanks to Jared and Tom as well for presenting this morning. We are going to jump into the question and answer section of the presentation here. Before we do that, I do just want to remind everyone that this presentation will be available after the fact and sent directly to all registrants that registered this morning. And that recorded presentation will also include this question and answer period. The PDF version of the slides will also be available online as well. And like I said, we'll be sending those directly to your inbox if you registered here this morning. I do also want to mention before we jump into some of these questions, Deb Wagner, who is also joining us this morning, I'm going to go ahead and make her a panelist as well, in case she wants to speak to any of the questions that are posed. So I'm sure, I think she should be on, but Deb, if you aren't, just let me know. And with that, I will jump into some of the questions. Should pro forma taxes be listed on balance sheet checklist under item number 9?
I can jump in on this one. Jared, Curtis, and Tom, Andy, jump into if you want to add something. So if a community has to complete a pro forma tax rate recap because of a delay with their valuation, once they complete the pro forma and they're going to fill out their balance sheet, when we look at the balance sheet checklist, we would expect that checklist number 9, the figures would tie to the pro forma recap. Because what happens once your pro forma is done and then you submit your balance sheet, and we're going to check your balance sheet checklist number 9 to page 3 of your tax rate recap, which are your local receipts and your estimated local receipts. Once you actually go ahead and do your final tax rate recap, those same figures are going to flow over to your tax rate recap. So they should be the same.
Thanks, Jared. This question goes back to a little bit of Andrew, your portion of the presentation, I believe, but obviously others can jump in. You gave examples where a municipality may have multiple general funds, but that practice does not seem to be recognized by MGL 5354 or UMass, and is not permitted under GAAP. Does the DOR support multiple general funds, i.e. are separate free cash calculations done for each?
No, we're not doing separate free cash calculations. The multiple general funds is a bookkeeping, a local accounting thing that some accountants are using to track certain portions of their general fund. The reason we're doing that multiple fund form in there is because you're rolling all of those forms, all of those different general funds into one. We want them totaled up, and we're going to do one free cash for. We're treating it as if it was booked as one. But if you want to track things, like I said, some people have them for their encumbrances. They want to account for them in a separate account, or the school the school encumbrances or things, they put them in a separate account. If you want to track that, that's fine on your own books, but you have to roll them all back into one general fund for when you submit to us. So there's only going to be one. That's something that you're doing locally on your personal books. And this is how we get it all back into one place for us, and that we can see it in one location.
The most common example of this that we see is places where, usually in big cities, where Fund 1 is the general fund for city operations, and Fund 2 is the school. And what those are both general fund funds, but they segregate them for various reasons at local choice. Again, if that's the case and you can't print for us one consolidated trial balance, then we need for you to fill out that tab that has the multiple general funds and provide us the trial balance for each of those general funds. But we prefer to have you just print us a consolidated trial balance that shows both of those general funds rolled up together. So that's why we ask for that.
Thank you both for clarifying that. This next one is both, I guess, kind of question and a comment. Why is there an amounts to be provided for bonds and notes payable in the capital projects fund? This is not typically accounting in the capital projects fund or any other fund with short-term borrowing. Simply cash and notes payable should be sufficient.
So the reason that we put that amounts to be provided line there is because even though it's not what usually happens with short-term borrowing, we do have instances where people have recognized the revenue. So they're basically treating the short-term debt like long-term debt. And it's just the way that they handle the debt journal entries. Again, they're recording the revenue. So you have the ban liability and the cash, and then you have the amounts to be provided and the revenue recognized. It changes how we look at the short-term, how we would look at a deficit with regard to that. We don't prefer to see that for short-term debt, but we do see it sometimes. So we've, made an allowance for every eventuality that we can think of on a balance sheet. And invariably somebody will do something we've never contemplated, but that's why we have that line there.
And additionally, we put in all of the columns we felt we needed and all of the rows we felt we needed because of the nature of the template. There are areas where they meet that aren't going to be in certain funds. There's a column for trust funds and there's a column for real estate taxes. You're never going to have real estate taxes in the trust fund column, but there's going to be a cell where those two meet always. So you're going to have places on the form where you would never ever put a number in them.
Next question is actually about the actual one of the forms itself and one of the pages. Is it possible to add lines to the user charges receivable area of the outstanding receivables page? If you have ambulance, outside details, and multiple enterprise fund utility liens, tax liens, and deferred charges and betterments, there is not enough room.
If you're speaking about the outstanding receivables form, the gateway form, you don't need to put those type of receivables in there. We're not looking for them. If you've been around a few years, you may recall there were more lines on that form previously. We have shortened that form up, hopefully for your ease. We've only put on there basically the things we're looking for. So you do not need to report those things to us in any place other than the combined balance. You would still have to put them on the combined in their appropriate section, but you do not need to include them on the outstanding receivables form.
And you go a little further too, Andy. In Gateway on the outstanding receivables form, you cannot add additional lines.
Thanks for clarifying. And Jared, we had a follow-up on the question earlier that you had answered about pro formas. The person clarified that they meant for taxes received for municipal properties sold.
For municipal property sold. So based on what Tom was talking about on the balance sheet checklist number 9 should match up to what's on either your pro forma recap page 3 or your tax rate recap page 3. Balance sheet checklist number 10 would be for those additional revenues. So if you had properties that were in foreclosure and those properties sold, we only recognize the interest in the fees that you could list on balance sheet checklist number 10. And as Tom mentioned, when we look at your free cash, there's a separate form that we didn't discuss because it's not something that cities and towns have to submit to us. But when we go to prove out a community's free cash, we look at the receivables for tax liens and tax foreclosures from the prior year to the current year. And that becomes part of our free cash proof that we utilize. Tom, Andy, if you guys want to jump in and add anything else.
Well, I just want to talk about tax liens and tax foreclosures in this context a little bit. So you should never estimate tax lien revenue on page 3 because that goes, if you get it, it goes to relieve the receivable. The only thing you should be estimating on page 3 for your local receipts is any interest or fees you might get on it. Same thing for tax foreclosures. If you're planning to have a tax foreclosure sale in a year, but you have not had it yet, we don't want you to estimate any revenue for that on page 3 of the recap because it's uncertain and you might think you're going to have a windfall, but you never know what's going to happen. And it's just too risky to estimate that kind of revenue on your tax recap in local receipts if you don't have it in hand yet. If you've had a tax foreclosure sale and you have the gains on sales of foreclosures in hand when you do your recap for that fiscal year, we're happy to let you estimate it and we'll ask you to provide us some supporting documentation. But again, tax lien revenue and tax foreclosure revenue goes to relieve the receivable first, and it's only a gain or interest in fees on sale of foreclosures that would get estimated on page 3, and the foreclosures only if it's in hand. We had a community this past fiscal year, and we just certified their free cash that actually had a $1.7 million loss on sale of foreclosures. So that's why we don't want to take the risk of letting you estimate that revenue unless you have it in hand on the recap. Another point I just want to make, and maybe this will answer some questions, but one of the big reasons we wanted to do this webinar is because once we calculate your free cash, we prove your free cash, and Jared just referred to the free cash proof. We use the questions on the checklist to prove your free cash, and that's why the accuracy of those question answers is so important. If you take a guess or, you just are rushing through it, that's not helpful to you at the end of the day because likely we're not going to be able to prove your free cash and we're going to have a lot of questions and that's going to cause a holdup in your free cash certification. And we prove free cash to within a range. We're not trying to look at it, prove it to the dollar. But that's why the answers to those checklist questions are so important. And I would strongly advise, again, if you're still confused about what we're looking for in the answers to those checklist questions, reach out to your field rep when you're answering the questions for the checklist because it's what we use to prove your free cash to within a range. So, you have to remember any budgetary variance is what creates your free cash. So local receipts in excess of what you estimated on the recap create free cash. Appropriations expended that are less than what you estimated at your vote of your legislative body, that creates free cash when you spend less than you estimated. So those are when you get revenue that you didn't plan and it closes out to free cash. You know, if you get, you know, an old settle, you know, some old money, a reimbursement for something that you've already closed, you know, years ago, maybe a old FEMA reimbursement, and you've already funded it in the general fund, and, you know, that revenue is just going to close out to free cash. That's revenue received, not estimated. That goes on a checklist question. So we need to know those kinds of things, but that's why this is so important. Frank.
And you know, Deb and Andrew, Jared, jump in, but I think the proof has been revised. You know, the questions on the checklist have been revised over the years. And I would say we probably prove within our range 95% of the time. I mean, it's really we've refined the questions down enough to get the correct answers. You know, we're asking the right questions. If we get the right answers, we're going to prove your number. And if we don't, then occasionally we found that things weren't booked or we found errors. So the proof is a very helpful tool for us and for you when we're going through the free cash process.
Yeah, I mean, this isn't necessarily a free cash proof training, although that would be interesting to do. But, you know, the big things we've seen recently are overlay entries not booked. We can't prove your free cash, and then we realize that you didn't book your overlay entries. You voted free cash to stabilization at town meeting, and you never made the transfer. You're recording that you're showing us that you voted an amount from free cash, but you never actually made the entry to transfer the free cash to your stabilization. And likewise, the other way, if you're transferring stabilization to the general fund to make some purchase or do something and you never make the transfers, that's another thing where we have trouble proving your free cash. So, you know, that's something else to check at the end of the day is, you know, did you make all of your voted transfers? And were there any differences in the amount that you voted to transfer versus what you actually did transfer?
Thanks, everyone. Just a couple more that we have here. Jared, I think you may have mentioned this, and I'm not sure. I think the answer may have, I'm not sure if it got sent out to everyone or just a few of us, but the person asks, does a community preservation fund count as another general fund, or where does that get reported on the combined balance sheet? I'm creating a Fund 03 for this right now. Fiscal year 22 will be the first year I'm reporting data on the balance sheet.
That community preservation is a special revenue fund. It should not appear in the general fund. Do not create a Fund 3 in your general fund for it, please. Reach out to your rep if you need some individual guidance on this. But community preservation, once you accept that, it is creating a special fund through the legislation. So you will set it up as a special revenue fund and report it all there.
Okay, we'll try and get through a couple more of these. I do want to be respectful of everyone's time. The undesignated, sorry, just scrolled down on accident. Sorry. The undesignated fund balance roll forward requires us to add back current year reserves for expenditures, which would wipe out the purpose of reserving for next year expenditures. What is the reasoning behind this? The funds are not available as of June 30th, so it does not seem that they should be available for free cash certification.
I'll take it. All right, so you're doing the reversing entry. The reason you're doing it is because that money will show up in your expenditures next year. When you do your closing entries for the next year. The reason we're having you set up the reservation, I always explain it as, imagine your undesignated fund balance is your personal checking account. And you know you have to pay your mortgage and your car payment. Those are things you've set aside that money. You might have $10,000 in your checking account at home, but you don't really have $10,000 available because you know you got to pay your mortgage, which is $2,000, and your car payment, which is $500. So you set that money aside. But then when you actually make those payments, you reverse them. We're just setting up a one-day thing for June 30. and then you're reversing them. That money will flow through and pay through the actual expenditures. When you make that's why I was saying on a good undesignated fund analysis, you only have your expenditures and your revenues closed out, and then any of your reversing entries and closing entries. You're not actually paying anything out of that reserve for expenditure. You shouldn't be making, whatever that was going for, whatever you voted that money for, you shouldn't be paying out of that line in the fund balance. It is just a temporary setup to reserve that money.
And just to add to what Andrew just said, so when you have fund balance reserve for expenditures, that's money that you voted to the next year's budget. Should you not, so you're going to reverse it in the next year and book the current year's reserve for expenditures. Your reserve for expenditures should only be the reservations for the next year. If you have money left in a fund balance reserve for expenditure account that the project's not done, that becomes fund balance reserve for special articles or continuing appropriations. That does not stay in fund balance reserve for expenditures. Fund balance reserve for expenditures is only the free cash that you voted or overlay surplus that you voted to carry forward into the next year. The other thing about checklist question 15 is where you see the fiscal year that the free cash was voted for, that's the fiscal year the money is going to be used for. It's not the fiscal year the vote was taken in. So again, that's something I want to just point out for checklist question.
And one more piece of information to confuse everyone a little further on this, but it is something that was mentioned in that question, so I want to highlight it. Once the vote is taken at town meeting for, if you've set up free cash for a capital, you vote some free cash for a capital project that's in the following year, you can start spending it immediately. You don't have to wait for July 1st. So if you start spending, if you vote, you have an April town meeting, you vote some free cash for the next year, and you start spending it right away, your reserve for expenditure may be less than the actual vote number because you've spent some of it or all of it before the year ended. And if you do that, that's fine. We will ask the question why the reserve doesn't equal what was voted on the line there. We'll say, how come it looks like you voted $200,000 for next year's budget, but I don't see a reserve for $200,000. And you can say, oh, we spent it, in June or whatever. That's fine and that's allowable.
A lot of times we see that happen when it's a transfer to stabilization. The journal entry will be made at pretty much the day after the vote, or at least prior to June 30th. And so you don't need to show that amount as a fund balance reserve for expenditure if you've already made the transfer to stabilization. But better than us having to ask, if you do something like that, provide us a little explanation with your submitted paperwork.
I think we have time for just one more question. If you have any additional questions, I'd encourage you to reach out to your field representative, as all of our presenters mentioned this morning. This person asks, how do you want FEMA public assistance deficits substantiated? And is there any position yet as to whether they will be deducted from free cash for communities that have multiple legacy PWs? I'm not sure what the acronym means, unfortunately, but it names several past storms: Sandy, Nemo, Juno, and Riley.
So if you have legacy storms for which you declared an emergency or the governor declared an emergency, and you have not yet received the entirety of your FEMA or MEMA reimbursement. Now we've checked on some of them, and you'll see the guidance in the budget bulletin that will come out this week. But if you still are expecting a reimbursement, we will not reduce your free cash. And we know what storms have been settled up and what haven't. If you've received every dollar you're going to get for those storm reimbursements, and you still have a deficit remaining, unless you provide for it prior to year end, you should plan on raising that deficit in the recap to fund the deficit. We won't hit your free cash if you still have a reimbursement coming and there was an emergency declared. And I think that's what's being asked.
Thanks. So as I said, that was our last question for this morning. Again, if you have any other specific questions, I encourage you to follow up to your local field representative. Thank you again to everyone for joining us this morning. I hope you found it informative and helpful. I'd encourage you to visit our website to find more resources that will hopefully be of assistance, maybe not only to you, but to others in your local city or town hall. Thank you to our presenters this morning for presenting. And we look forward to hosting everyone at our next webinar. We'll be sending out information soon. Like I said, this recorded presentation and the associated slides will be sent directly to your inbox and then available on our website, if not at the end of this week, early next week. So thank you all again, and have a great rest of your week.
Thank you, everyone.